TJ the Wheel Deal coming at you live. It is Tuesday, July the 10th, 11:06 a.m. This is going to be short and sweet, featuring UZI options. I want to give a shout out
Hey,
to the
everybody.
Bulls. I want to give a shout out to the Bulls and the Bears, Matt, because I was watching his video last night, and he's on the Tasty Trade platform now, and I noticed that his screen was bigger. So the reason that it's bigger is because he uses the website portal to show his account versus the desktop version. So on the
Nice.
desktop version, it gives you 120% font. It's a lot clearer. It's a prettier picture. But anyway, I just wanted to show you guys what I've been working on, and then I want Uzi to just go over a couple of the key positions for us real quick. So Uzi, how are you doing? And then I'm going to pull everything up, and we'll get rocking and rolling with it.
Doing good, TJ. Doing good. We have been a while since we have a chance to get together on one of these technically speaking events, but good. Today's been busy. We've been closing trades like crazy, booking profits. Yeah, it's been an active day. So happy to be here with you again. Glad you're feeling better, man.
Awesome. Yeah, I am feeling a little better. So this is familiar, right? You guys have all seen this page, right? Are you able to see the portfolio, Uzi?
Yep, definitely.
Awesome. So what I do now is I can just click on the accounts. I click on accounts, and it's going to take me. Now this picture is not going to be as crisp, but I'm able to make it larger. So bear with me. So I go here to trading. And then now I just got to go click on the right situation. So I go here. So this is featuring the big account. So you can see how the font's already bigger.
Yep, looks good.
So now let's focus on a couple of them. So here I open it up, and that's Amazon 250 put, 250 call. August the 15th is the expiration date. 36 days is 36 days to expiration. 210 and 230 are the strike prices. 210 on the put, 230 on the strike. The trade price is that's what I got paid, right? So I got paid $955 in premiums, 572 on the put, 383 on the call. The market is going for 1105, so 455 on the put, 650 on the call. So if the market's bigger than the trade price, that means that I'm down on the trade, essentially. And if you keep going to the right, you're going to see the extrinsic value, 275,000, 113 on the puts, 161 on the calls. Profit and loss for the day, profit and loss open is negative, because that makes sense, because if I was selling this strangle today, I would get more premiums than I collected whenever I sold the strangles, if that makes sense. And then it gives you the profit and loss percentage, gives you the probability of profit is still in my favor, 56% overall, 76% on the put, 68% of the call, and it gives you a profit and loss open with like the little bar based on where you're at, and it gives you a profit and loss year to date. It's freaking awesome. It gives you a lot of metrics. And then here on the very top is the most important metric for me, which is the extrinsic value. How much are all your options worth? So right now they're worth 4.5 million bucks. You're up, up 82,000 a day on all the positions collectively, up 759,000, et cetera, and counting. Obviously, this is live, so this is moving as we go. Now I want to show y'all something here that I discovered on the charts. Looking at Matt's portfolio again, the Bulls and the Bears. Go check him out. He's been on the channel. He got his ass kicked getting real greedy with Tesla. It didn't work out. He lost a lot of money. He regrouped. Now he's back on track. He moved over from Robinhood to Tasty Trade. So welcome him to the winning team. And I'm here to help him out in any way that I can. So I want your help, Uzi. I sold a big short strangle, massive, dude. 250 puts on Hood at 70 and 250 calls at 120. Collected quite a bit of premiums, as you can see, $521 total. Multiply that times 250 bucks or 250 options. It's quite a bit of money. The extrinsic value currently is 86,250. So what does that mean? That's how much money is left. That's how much meat is left on the bone, right? So the profit and loss is 42,000, 43,000 total on this particular trade. My year to date is only 17,000 though, because I had a trade that I lost money on early on in the year on Robinhood. I just bailed on it at a loss, and I was like, I'll pick a better spot down the road. So that's a nice teaching segment for you guys. Like sometimes it's okay to book the loss, and you can reassess and revisit the situation later if you want to go remedy that situation. Uzi, I'm sure you've been in that situation over the years several times.
100%, hundred
You don't
percent.
have to stay in a losing trade. You can cut it out and then revisit it when it's a better setup for you, right? So I waited for Hood to go on a crazy ass run. And then I was like, well, let me sell the strangle way up there because I feel like there's not a whole lot of risk to the upside. I did this when Hood was at like $100. And I was like, let me go sell the put at 70 in case if there's a retracement. I like it at 70. I don't love it, but I like it at 70. And I don't think it's going to go to 120. So it was just a no brainer for me. And, I sold it. I don't know if it'll tell you the order chain here. This is where it doesn't give me as much step here as it does on the other side. But I've been in this trade for a couple of weeks now. So anyway, what I did now is on the chart, if I pull up the chart here, is I put price points on it. So we had the Bollinger Band up there. We had the RSI on the bottom. So RSI, if it's under 30, it's oversold. If it's above 70 or so, it's overbought, right? So
Yep.
that's just kind of like a real quick for you guys. And then I got the Bollinger Band set up here. And then we have the price points. We have 70 on the put and 120 on the call. And you'll see that it's on the upper end of the Bollinger Band. So there really isn't a whole lot of risk to the upside based on the Bollinger Band as well, even though the price is protruding. It has broken through the upper end of the Bollinger Band right now. And since I'm way on the other side of it, every day this is going to adjust a little bit. So I feel like we're in a pretty good spot here. But Uzi, I like for you to look at it on your chart. Tell me, how are we looking here? Because my mindset is I want to let this thing ride because I just feel very, very confident in taking ownership of it at 70, first of all. And I feel even more confident that it's just not going to get to 120 right now. Will it get to 120 eventually? Absolutely. But by that time, I'll already have rolled out several times because I want to be in this trade for the next 6 months. But eventually, I want to be sitting at like 130, 140, 150 on the high end because I think that Robinhood is that guy. It's that company. It is going to probably be a $200 billion company down the road. So what do your charts say, Uzi?
Yeah, I'm just going to start presenting here. Let's get this going. Haven't done it in a bit here. Let's go to the entire screen. Let's go to that one. Okay. Well, Hood is a familiar name. So we're is it showing up yet? Should be showing up. Oh wait, got to add it to the stage, right? I think you have to add it to the stage.
There we go.
Okay.
So
What we're looking at is
real quick. I
yep,
want y'all to see the differences between professional technical analysis and TJ just doing it real quick and putting the shit that I really need to make a decision because Uzi's has a lot more going on that's very very important. I just stay with the very basics.
But you know what, TJ, the basics can work. A trader can have two tools in his toolbox or 15. As long as he uses those tools well and it works for him, that's really all that matters. So keep doing what you're doing because it's working for you. Your account size is showing what can be done with whatever tools you're using, man. So I just tell people don't get too complicated, but the more you do have as far as the tools in your toolbox, the more you can maybe hone in on some accuracy. But still, whatever's working for someone, I just recommend stick with what's working. There's no need to add things that might confuse you or complicate what you're already doing that's working. But so let me just get this all set up. Okay, so what we're looking at is Hood, right? So we're in this thing too. We're short, but your positions here with the 70 and 120, I wouldn't mind owning this at 70 either. Matter of fact, I wouldn't mind owning this at 80, 85. But your strikes are pretty equidistant too from current price. So that shows that they're probably around the similar delta that you chose with the
Mhm.
120 and the 70.
Yeah.
But what I have is just a simple trend line here to start with, and that just connects as many dots as if you want to call it that as possible, and that's how you get your trend lines. And the more touch points they call it on that trend line, okay, the stronger that trend is, and the more likely that every time it gets to that level, it's going to bounce off of it and serve as support. So we can see that price just went kind of sideways here for about a week or two, wouldn't even get to this trend line. Okay, so that's showing that price is very strong. The RSI, as we can see down below, is teetering on overbought levels again. It's actually at 70.78, which is considered overbought. So it's been hovering in that overbought territory now, going all the way back to the beginning of May. So it's overbought for a length of time already, but that doesn't mean that it can't stay in overbought territory for longer. But I did some analysis on this with one of my members as we were doing some coaching work, and I'm going to zoom out for a minute so you can see that in the past, and I'm zooming out so we can see more where RSI it generally gets up above the 70 mark for Hood, but doesn't spend a lot of time there. It's already spent a lot of time right now in this time zone, more than it's really ever spent in any one stretch, if you want to call it that. So if you ask me, it's a little overdone, and um, the RSI number is also is proving that. But what's also I noticed this week was we had a little bit of negative news come out on Hood. Now, all the news that's been coming out on Hood recently has all been positive. That's why, honestly, the price ran from, let's call it, down here in the 40s to 100. Okay, the news stream has been positive until recently. Where was it here? I probably won't be able to pull it up quickly, but there was something about what they're trying to do in Europe might run into some headwinds, and then that's why we had this little bit of a couple of red days over here, which didn't propel the price any lower. I thought that might bring it down to the trend line and actually get its first break of the trend line, but that didn't happen. But what I noticed though was a little bit of negative news started to trickle out on Hood, and when you see that start to happen, not that it's going to start getting overwhelmed with negativity, but the shine might be coming off this stock if you ask me a little bit. If you can see the price is, yeah, it's up today and it was down at one point, but I just think it's been overbought for a while. I do think it's due for a correction pullback, and I do think that going by Fibonacci levels, I think we're going to see in that $80 range in time. I don't know. You can never tell when it's going to happen, but I can see it coming down to the 38.2 or the 50% retracement level. That gets it down to about 80. Okay, 80 to 75. Let's say on pullbacks. But as far as your strikes, I mean, you look golden here. It's gonna take some more good news to get it anywhere near 120. Technically, though, it isn't a bull flag. So technically, we are in a bull flag. So we can't deny the fact that right now price is just consolidating. It's doing so on light volume. Okay, let's take a look at that volume profile down here. Not the volume profile, but the volume patterns. Now, one negative for any longs who are hoping this keeps going up is that we've got descending volume, and we've got basically an ascending share price, although it is within this triangle, and it's a symmetrical triangle. Now, what's interesting about symmetrical triangles is that price can generally break 50% either way, to the upside or to the downside. This is not necessarily a bullish triangle. It's just a consolidation period right now. So while most triangles, especially on the uptrend of the stock, are bullish, this symmetrical triangle, given the volume pattern, given the RSI overbought, and given a little bit of that little negative news that came out, this could go either way. Now, for us, because we're short, I'm hoping it breaks to the downside. Okay,
Mhm.
but for any longs, it's going to take more good news. Now, think about it. All that news flow that's been coming out has been huge. That's what's got the price to where we're at. What could they really add news wise to get the fire burning again to make it go to 120, 110? I mean, we are a stone's throw away, but it's going to take a lot more good news if you ask me. Earnings aren't coming out until the end of the month, July 30th. So between now and then, I do anticipate some consolidation. We might get some weakness until we get the earnings. So when I say weakness, not a sell off to 70, but maybe a little bit of a Fibonacci retracement, which it hasn't done in this whole move up since 40, 45-ish. So, and that's why we're short. We got caught in this move up. It just hasn't. It's been relentless. But I do anticipate some relief on that soon. Some Fibonacci pullbacks would be great for new longs that want to get in, healthy for longs that want to add, and healthy for people that want to get out if they're short. But yeah, your strikes look safe, TJ. I can't see either one of them getting hit, before earnings for sure. Now the question is after earnings, how much can price move? So that's what we're looking at now with this. I don't know what color this looks like to you guys. Let's call it purple. Okay, the purple is what's called the probability cone. They probably have that on Tasty Trade too, because this was developed by the same developers as Tasty Trade. But this just shows where price could go based on implied volatility and the current share price. So and it goes by the strike price. So by the middle of August, the probability cone is suggesting it could be down to 74 or as high as about 120. All right, so it's pretty wild how that lines up right with your strikes, TJ. Pretty cool.
Yeah. So let's do another familiar one. Let's go Palantir. I've got 115 and 155. I had taken a lot of the positions off, but then I just got more comfortable and I added an additional 150 short strangles yesterday. So I'm sitting at 115 on the put, 155 on the call, 36 days out. So August of 15th. I know they have earnings on August the 4th. So before that, I'm going to do a preemptive strike and I'm going to roll and I'm going to get probably to like 105 on the put and like 160 on the call, or even 100 on the put and 160 on the call, just to have a little more wiggle room, because I want to stay in this trade for at least till the end of the year.
So just a quick observation. This is a little bit of a tighter strangle you have on than you have on Hood. Okay.
Yes.
You definitely have you're a little closer right now to that short call. And I'm sorry, did you say, are you long Palantir? So are these covered calls, or this is definitely a naked strangle?
This is a short strangle. 115 on the put, 155 on the call. I did not own these shares.
Right. So,
and it's 250 contracts. So I can't get caught to the upside. You follow me? That's why I'm trying to expand the highway on the upside to avoid any of that damage.
Yep. So technically, it tried to do a pullback to the 50-day moving average, which we'd call this a successful retest of the 50, bounced right off it. Okay. So what's holding it up right now is prior resistance right in this area here. I'll highlight it. So it's having a tough time, getting through this area right here, which is good for you on the upside, because you definitely don't want it to penetrate all-time highs of 148.22, because at that point there's no overhead resistance. That would be blue skies ahead. So at that point it would just be up to wherever profit taking comes in, or you reach some technical levels. Now if I was going to do some type of quick price projection targets, hang on, let me get that off, remove that. I mean, to the upside, if it does get through the all-time highs that it had back about 2 weeks ago, then we're looking at about, using my Fibonacci extension scale, the 161.8 move would be about 164. So if it gets any energy and breaks through that high of 148, a target, take profit target for longs, and a stopping point, resting point would be about 164 in my opinion, based on Fibonacci extensions. So that would penetrate your 155 upside. But again, that's 6 points away. You'd easily be able to roll the 155s up and out a month, and probably up 5 points if you had to.
Easy, yeah.
You
And
know,
I could
so
roll
that
up more. I could roll up more, even if it's for a debit, because I can also roll the 115s up and collect massive credits. So that's
100%.
the
Yep.
difference. That's the difference between selling both sides. Is you can use the profits of one side to pay for the debits on the other side to reconstruct the highway, so that you're still in the sweet spot.
Yep, and that's professional options management right there.
Yeah.
Yep, and the only caveat with that is, I know you know this, but I'm just talking to the audience. You wouldn't want to roll the 115s. Let's say you're going to roll the 155 slides. Let's say 175.
Yeah.
You wouldn't want to necessarily roll the 115s up the same price points.
Yeah.
Let's say 20 points, just because you do run the risk that price gets rejected and then starts to head
Yeah,
back.
it's a whipsaw. It's a whipsaw effect. You get
Right.
clobbered over here. You do a construction project just to go get clobbered again on the other side, so it becomes like a whipsaw.
Yep. Now that can happen,
Yeah.
and I'll tell you how it happened. It happened to us on ENPH. We
Mhm.
we had sold some cash you could puts on ENPH. The price fell way below our cash you could puts. So until we had to deal with that, I was selling naked calls below the strike price of our naked cash you could puts, and
Yeah.
it ran us over on the upside. So we
Yeah.
had no issue with the puts closing those. It was the calls that got a little hairy. So yeah,
Yeah.
that can happen.
Yeah. So sometimes the best thing to do is just only manage, like treat it as individual trades and only manage the side that needs managing versus using the winning trade to finance the losing trade, right? Because I think whenever I saw a short strangle in my mind, I sold them at the same time, but they're two individual trades.
Yep.
And I think that people seem to not grasp that. I'm going to say it again very slowly. I sell them at the same time in the event that I get lucky and we just have sideways action. Because a short strangle is meant to be a very neutral trade, right? So you sell the put, you sell the call, you're trying to maximize the data that you're collecting, capturing on a daily basis. It's a data collector's dream, the short strangle in the sideways market. So I sell both of them. A more optimal strategy would be to sell the puts on a dump and sell the calls on a pump, right? That would be a more optimal strategy, but that's not going to happen on the same day, more than likely. So I choose to sell both, and then I'm going to manage and I'm going to roll and expand because whenever I sell the initial short strangle, it is just that is the initial strangle. That's not what the trade's going to look like 6 months from now in my mind, right? So people are like, well, why don't you just start? I'm like, because there's not going to be no premiums over there. Because in order to be real comfortable with Palantir, I'd have to be sitting on like 80 and like 170. They're not, there wouldn't have been any premiums over there when I had done it, right? So you have to be willing to deal with the pressure, and then you're going to construct the wow, that was beautiful. Where was that? I saw a screenshot of something that I would rather be sitting over there right now.
Oh, on
You had
my
a
on my side.
Yeah, you had a
I
picture
don't
on
know.
your screen.
Oh, yeah, it's a screen. Let me see if I can. I don't know if you're gonna see it though.
Man,
That
yeah, where is that?
I don't even know.
Don't
I
tell
don't
my
even know.
wife that she'll book that vacation tomorrow.
Yeah,
Holy
you,
shit.
you'll be there next month. Yeah, I can. I
Yeah,
can try to
on the
find.
road right over there.
I'll after we get off the air, I'll pull it up and see what it is.
Dude, that looks like it could be something like in Greece or in the Amalfi Coast in Italy or something
No,
like that.
no internet there though, TJ. You'd have to get a hotspot for your
Bro, it's
trades.
gonna be okay. I will manage. I will manage. I will manage.
Starlink.
Dude, you know what? Dude, I really need to get into this Starling thing.
One of my members has a Starlink. He's got one outside of his, or I don't know how it works. He's got one. He's got a Starlink. He's the only one I know that has a Starlink. Hello. Oh, okay.
Yeah, so Palantir looks good, feels good. You got time for one more? I know you gotta
I
go.
do. I do. One more, TJ. Yep.
Yeah, let's go with hymns because
Okay.
hymns, and the reason I want to go with hymns is because it is a very profitable trade for me right now. But I want to say this very carefully. It is just a trade. I have absolutely zero interest and less than zero conviction on this stock. I think that Amazon could just stroke a check for the whole company if and when they feel like it. So I just saw it as an opportunity with elevated premiums to make a shitload of money. And that's kind of what is happening. I'm making money with it. But I don't care if it's in the portfolio or not in the portfolio. I am zero emotional attachment to this thing. So let me go look at the actual trade itself. And it is sitting at, this is for August 15th, so 36 days out, 40 on the put, 70 on the call, 250 contracts. So it's a massive trade considering how indifferent I feel about it. There's $92,500 left of extrinsic value, up $24,000 on the actual trade itself, up 29,000 collectively. Previously, I had been in a trade that had cost me about 20, 25 grand. So I've since made all of that up, and my year to date is 29,000 to the good on HIMS. When before this trade, I was negative a few $1,000. So I'm at 40 and 70 HIMS on HIMS. Uzi, take it away. What do you think my chances are to continue to have some success on a stock that I have zero interest in? This cannot be more of a cash grab because I'm just in this thing for the money. I don't give a shit about hymns. I love Tevez, but I'm never fucking watching hymns weekly or monthly or annually. I don't care. I'm not interested.
So before I draw the Fibonacci's, let me just get that off. So the first thing that draws my attention is, it's sitting within, it's not, yeah, let me just extend this to the right. So this is a triangle, right? It's a triangle. It's an ascending triangle, but its price is so low in the upper and lower boundaries that it's weak. It's showing signs of weakness, even though it's within an ascending triangle. Price is trying to figure out, its next move. Can it get above the 50-day moving average, which it can't. Every time since this big red day on that news, price has not been able to get back sustainably above the 50-day moving average. That's a sign of weakness. So if you're long and bullish and you want this stock to go up, it doesn't look promising yet. So it's first line of defense. It's got to get over that 50. That's not happening yet. The other short term moving averages like the 21 and the 8 that I watch really don't even matter right now. Its struggle is with the 50. So until it gets over that 50, this is a bearish. It's a bearish overtone within an ascending triangle. Now, what does that mean? That means that price can really spend a lot of time just meandering to the up to the right, trying to, work its way higher, yet always being constrained by that 50 until it potentially breaks through this supportive trend line right here, this diagonal trend line, and comes down and tests the 200-day moving average. It's probably waiting on the next news catalyst,
Mhm.
because right now all the news that had come out is not allowing price to get back over that 50, and that's key because as you can tell, once price got over the 50-day moving average back here in April May, it just took off like a rocket and was about to test those all-time highs until that news hit. Matter of fact, here's the day before the news, and it was on the verge of a breakout. So that news really took all the air out of the balloon on HIMS. Now that's not to say it can't find its way back and try to close this gap above, but right now it's not in the doghouse, but it's definitely trying to find its way above that 50, and it can't. So it's, in my opinion, going to just keep trickling to the sideways to down, and test that trend line again on the support side because it's got nothing positive going for it once that news came out. Earnings come out in a couple of weeks on August 5th, August 4th. So that might be the next catalyst for a break out of this triangle. I do expect it to stay within that triangle though until then, and probably just head sideways to maybe drift higher. It's got the other thing about this pattern is right now it's it's what's called a bear flag inside. Hang on, it's a bear flag within the triangle. So we've got a bear flag, and usually these resolve to the downside. So I'm seeing more bearishness now as I look at it. If I extend these to the right, you'll see it more. This is price is now within this channel, which is within this triangle. It's all bearish to me. This actually is a bearish looking now. But what price can do now is meander within the upper channel line here, the lower channel line here, and within this ascending trend line. So it's got its work cut out for us. Your 40 strike is probably much more likely to get challenged than the 70 strike, given all those factors that we just said. Because look, the 70 is way above these prior highs over here, which it's going to take a heck of a lot to get through. So your 70 seems real safe. And the good news is, again, like we know, rolling puts is usually a lot easier than rolling naked challenged calls. So
Yes.
if you had to roll it, or even if you had to take assignment, you could probably get it lower down near that 200-day moving average in the $35 to $30 range if you roll those 40s. So
Yeah. So right now, Hims is trading at what, 53, I think, 52, something like that.
$50.40 right now.
Yeah. So here's the funny thing. The delta on the 40 put is at 19, and the delta on the 70 call is 20. So there's still a lot of gamblers that are betting on the short squeeze potential because this is a heavily shorted stock.
Yeah.
So it still has that call skew that's propping it up, if that makes sense.
It does. And one thing I just wanted to add, TJ, is that now that I add the Fibonacci retracements, price is sitting right on the 38.2 Fibonacci retracement. So the
Which is the
bull
second
case.
most popular, guys. 61.8 being the most popular.
Yep. Yep. And if you get a pullback to that 61.8, that's the golden zone where you would see that if it doesn't hold that, then all bets are off. It's probably going to fall back to the 200-day moving average. But what's interesting to see is the 61.8 comes in well above that 200. So if price does break through these two trend lines we just talked about, the next line that it should hold is about the $40 level. If that breaks through, the next one would be 35. So for the bull case, though, the only bull case I see right now is that price is being held up at the 38.2, which again, that's a strong hold. I mean, again, price could have fallen all the way down. Actually, it did. Look, isn't that amazing? The price did do a little bit of a wick on this day here, and it touched the 50% retracement level. So it already tested the 50. It's back above the 38.2 fib. That's the only bull case I do see, but it's something to hang your hat on if you're a bull.
So let's play a game called non-financial advice. So we're 36 days out, August 15th, right? I think it's 36, 37 days out, whatever it is.
Yep. Yep.
And I want to manage this trade 21 days out. So my idea was to leave the 70 where it is because I looked at the chart a little bit and I'm like, this thing's not going to 70. And I know that it's been there before, via a short squeeze or whatever, but I was like, just the fundamentals don't merit it yet, in my opinion. Again, this is me just looking at the growth. I think the growth is amazing, all that stuff. But this company just can't get out of its way, dude. And I don't even know if it's its fault. But it always runs into these headwinds, whether they're real or not. They're going to do GLP. They're not going to do GLP-1, all this other stuff. It just always seems like there's something because of the space that they're in. And it's going to be one of those days to where there's always something in that arena. So I'm like, I don't really think there's that much risk to the upside here, but I'm comfortable at 70. Eventually, I can maybe even go 75 just to really sleep easy at night on the high end. But I was like, I think it would behoove me if I was going to stay in this trade for another cycle, if you will, right? Versus just waiting it out to like 21, 14 days, closing it, taking my ball and going home. If I wanted to extend the life cycle of this trade, it would probably behoove me to go from 40 to 35 on the next cycle, right? Just to protect against a little bit of a breakdown of the technicals.
Yep. I agree. 100%.
because at that point, it's like, how low can we go, right? It becomes a game of limbo.
Yep. I'm trying to get my drawing tool because I want to draw one more thing before we go. I want to give them a little bit of a quick teaching lesson here. When you have a pattern, and when you have a pattern that pretty much anyone's two eyes can see, and I'm not trying to sound condescending, but just it's so obvious, this pattern, that when you get a pattern that fails this miserably, it usually doesn't mean bode well for the stock. And I hope this shows up. TJ, tell me if this shows up. This yellow line.
Yes.
Yeah. So what I'm drawing here with my little shaky hand here is this cup and handle. That's a beautiful cup with a handle, right? And it failed. Now, whenever you get patterns that fail, whether it's a head and shoulders top, head and shoulders bottom, cup and handle, when they fail, they can be aggressive to the opposite side. So this was supposed to break out and go to the upside. It failed.
Right.
This can now definitely head this way. And it looks, again, like, as I'm looking at this more and more stuff is starting to show up for the bear case. The only bull case is the fib level, but I'm not trying to say that the 40 is going to be challenged or dangerous, dangerously hit, but this does look like it's going to head lower, and that move you just mentioned, going from 40 to 35, would probably be, something that you'd look to do if in case price does break, especially if it
Well,
breaks.
one thing that we do also have to consider is the fundamentals, and earnings are on 8.4. So I think that's
Yep,
going to be very telling.
100%. I agree. Yep, that'll probably be the next catalyst for a move, and
And I think that that's something that we can wrap on, guys, is whenever I do strangles or just a cash secured put and whatnot, I'm typically 30 to 45 days out. So I usually get the initial trade and then I get a roll out of it. And then that pretty much positions me for a game called wait and see, because by that time I'm going to be rolling up on the next quarterly earnings. And what I find to be the case for me a lot, Uzi, is a lot of these stocks seem to lose a little bit of steam as we get as we go from the euphoria of the previous earnings to the anticipation of the last earnings. I kind of call it like the calm before the storm period, right? So I think
yep,
here for like the next the next 7 to 10 days is kind of like the calm before the storm on him specifically. Whereas like right now, the technic everything seems indecisive a little bit because it's been a while since the last earnings. And by the way, the last earnings were pretty damn amazing. So then it gets due for a reminder, if you will, right? And that's why you see these big spikes or big drops on these stocks, because people get very, very excited when the actual earnings comes out. But then, 3 weeks, 6 weeks, 8 weeks out, it fizzles out, right? Like that excitement or disappointment fizzles out. It did. Now it becomes about the next earnings report, right? So I think that earnings for him are probably going to be really, really good. And that's why it encourages me to maybe write it out for another cycle, because I'm like, dude, maybe there's more money to be made here, even though I'm not that excited about the company. But hey, if I'm willing to invest an hour and a half of my time listening to the earnings report, maybe talk to Tevis because he's so damn excited about the company. Maybe there is something there because this kid Juan talked to me about him when it was like $7 or $8. And
nice.
he was excited about it. This kid was excited about it. It's just like, dude, I'd rather be in Teledoc. So this is how wrong I was in the arena, right? How wrong I was in this entire space. I was like, to me, Teledoc seems like something more exciting to me. And then Hims obviously went on a run. I feel like it does have like from social media on X and people covering it on YouTube. There's a lot of people that seem to like the company a lot. So that could prop it up a little bit. I mean, I don't know how much money we have here on the YouTube community, but I was just saying there's a lot of people that talk positively about Hims.
Yeah, no, it's they advertise all over the radios, all over the place. In
Yeah.
the radios in my area. I mean, I haven't seen TV commercials yet, but they're on the radio.
No, I've seen them, dude. I've seen them. They
Well,
do
the
it.
Super Bowl, right? Yeah,
They
yeah.
do it for for like the horny stuff, right? Like the male and the woman, the libido products, and then they have the hair stuff. They have all kinds of stuff, and the fact that it can be delivered to your door, I I get the whole convenience thing of it because my doctor's he has a telehealth practice. I don't ever go see him in person, dude. I talked to him a couple of days ago. I'm like, hey, dude, I feel like shit. Antibiotics, boom, at Walgreens like an hour and a half later. You know what I mean? Like I ain't sitting there going to the freaking clinic and filling out paperwork. And I'm like, fool, can't you just pull this shit up on the computer? Why I got to fill all this out again, right? I mean, it's just it's way convenient, and I think that's kind of like what Hims is to a certain extent. Is you get it's a real quick fix for some issues that, especially if it's like a situation with like erectile dysfunction or whatever, or just like a motivator, you probably don't want the whole world to know. So the fact that they're pretty good about like keeping the anonymity going for you is a plus as well.
No doubt.
Yeah,
No
who
doubt.
knows? Maybe I can get excited about it. Right now, I'm not. Maybe I can. I'm willing to be open minded. How's that?
Well, what's nice about the company is they don't have just products for men, right? They have products
Yeah,
for women too. So they're serving, both genders.
true.
Um, Again, I'm not trying to get political. Maybe there's more genders, if however you look at things, but there's two genders, and they're serving both of them right now. So they've got a lot of potential.
Agreed. Agreed. Anyway, man, well, I gotta run. I
Me
gotta
too.
run. I actually feel good enough to grab a workout. So
Yeah, man, go hit the gym.
I may hit up the members with the members only session, but I don't know that I want to overdo it with my voice because I lost my voice quite a bit here over the last day or two. But yeah, man, I'll we'll see, we'll see. But anyway, I appreciate you guys. Hopefully next week I'll be able to go live a lot more, and let me know if y'all like me streaming on the other side of the platform where things are a little bit larger and easier to see as well. Anyway, I got to get rocking up.
I think it looks good here, TJ. I think it looks really good. I think it looks
Appreciate
good.
you, man. TJ, the Will Deal signing off. As always, may your skies stay blue, stock screen. Peace out. God bless you guys.
Okay, take care, everybody. Have a good
Bye bye.
day.
Take care.
Take care.